let's stay in the equities world. You teased before that you had plenty of small caps, and we weren't gonna avoid asking you about that. So before we get any particular names or where you're seeing opportunity, I guess if you think back to earlier in the conversation, we were talking about the distortion you're seeing in the top end of the market with the large caps and the inflows of super and passive. We imagine those effects would be smaller in the smaller end of the market. Are you seeing any distortions that we should be aware of as investors?
Well, these opportunities in smalls a bit because this passive money and most of the super money is going into the large caps and it's pushing up the valuations in large caps. That's not to say that small caps are necessarily cheap. The earnings growth hasn't been great in that space either. But it's got more opportunities, more hidden gems, more uncovered things, more things that we think aren't valued correctly or things that are cheap. Not as picked over. Good quality large cap companies tend to converge on this 30 times P multiple, whether you're Wesfarmers or Telstra's on its way there or CBA. REA car sales will be better. But in small caps, we can find some companies that have got improving fundamentals, good earnings growth story emerging, and the multiples aren't too unattractive. So, passive's not coming into small caps. There's not really significant FUM in small caps ETFs, so that creates opportunities for us as active managers.
Are there any that you particularly got your eye on at the moment?
Yeah, so well, Brickworks, Soul Patch we've spoken to, but outside of that, Regis Healthcare, that finally we're in the phase in aged care. I mean, aged care, these industries tend to be poor investments long run because society flip-flops from you guys are making too much money, I'm going to make your business models unviable and force you to make no capital returns, and they all collapse. Then they get a shortage of beds, and this is where we're at now. Australia is looking to be very short of aged care beds, and so they're improving the economics. They're making the industry more profitable. So we've got a 4 or 5 year plus, probably 7 year structural boom in aged care. Now, of course, Regis is pricing some of this in. Its share price has done very well. But your earnings growth is going to continue to be strong for many years. So we still quite like Regis. In the biotech space, I'm getting really spicy here, and I'll go spicier again after biotech.
Nice.
But we've owned Neuron Pharmaceutical for a long time, developed here in Auckland University. It's a drug that helps rare genetic disorders, tends to be in children. They have one commercial drug called Daybue in the US where they get royalties. But more importantly, they've got a pipeline of phase 3 trials coming up in about 18 months, 2 years' time. These drugs are huge. If they get success there, this company's got multiple X upside. It is a biotech. You can never hand on heart say this drug's going to work, this one's going to pass trials. We've followed this company a long time. We're optimistic. We put a decent probability on it, but we think the risk reward's very good. But you've got to be patient because it's a couple of years away from these big drug trial results. So it tends to happen as your share price 6 months out from the release of these big trial results will start to ramp. And we're following some of these little oil and gas plays in the Beetaloo Basin in Northern Territory with interest. It's a shale play. They're starting to get better and better well results, some good flow results of gas. These small ones called Beetaloo Energy and Tamboran Resources. We're not investors in them at the moment, but if you ask what excites me, I would love to see these companies successful because it'll create a huge industry for us. Getting something like the repeat of the coal seam gas boom earlier last decade, it's not just going to be opportunities in these small oil and gas companies, but the drilling companies, the labour, the benefits to Australian companies, lower gas prices in Australia eventually. So follow the drill results. It's exciting.
When you think about some of these oil and gas companies, how much do you think about like the political context? And in particular, I'm thinking about like the proposed, reservation scheme and stuff at the last election. How much does that, political context factor into your thinking around the results that the companies are producing?
Yeah, rightly so, there's big political involvement in this sector because, like you say, we've got to restore rehab. It's really important. You want these companies to be improving their emissions and their impact on the environment to the degree we can. Politically, we're probably through the toughest period for this industry. A Labor government but they're pragmatic as well and seeing that, the gas price and the cost of gas in Australia are a problem. And potential shortages, having to use coal more is not good for the environment. If we can bring on more affordable gas, then we don't have to use as much coal That's better for our carbon emissions. So, while it's never going to be a walk in the park in this industry, I think that's a more balanced approach. So, good gas discoveries will have hoops to jump through, but I think the ultimate destination is a pretty mutually beneficial outcome and trying to get some decent gas projects back on. So, Santos has just got there with their Barossa project. If the Northern Territory is hugely incentivised and supportive of the Beetaloo Basin, they would, it'd be great for their economy and also great for gas price in Australia if there was success there.